All right, let's dive in. Today, we are going to tackle a huge topic, one that could completely change how you think about money. It's called decentralized finance, or DeFi. Now, I know that sounds super complex, maybe even a little intimidating, but the core idea is actually pretty simple. What if we could build a financial system without all the gatekeepers? Let's find out what that really looks like.
So to really get a grip on where we're going with DeFi, we have to start with where we are right now. And for pretty much all of us, that means dealing with traditional finance. Let's talk about all the stuff that probably drives you crazy about your own bank.
I mean, you've probably asked yourself this, right? Why on earth does it take 3 days to send money across the country? Why does getting a loan feel like a full-blown investigation? And where do all those little fees come from? It just feels clunky. And it turns out there's a really specific reason for all that frustration.
Yep, that's it. One word: middlemen. The entire traditional financial system is built on layers and layers and layers of intermediaries. We're talking about banks, brokers, credit agencies, clearinghouses, you name it. All these institutions are sitting right between you and your money, or between you and the person you're trying to pay.
And every single one of those middlemen creates a problem. They slow things down, they each take a little slice of the pie, which is why fees are so high, and they put up walls, like credit checks and mountains of paperwork, that can lock people out of the system entirely. It's a system that's often a total black box, and hey, as we've seen in the past, if one of those central players goes down, the whole thing can get pretty shaky.
So what if we could just get rid of them? What if we could build a system without all those middlemen? Well, that is the big, radical idea behind Web3 and its most powerful creation so far: decentralized finance. This isn't just a minor update, it's a completely new blueprint for how money could work.
So what is DeFi really? Well, think of it as an attempt to rebuild the entire financial system. Lending, borrowing, trading, the whole shebang. But instead of being run by big companies, it's built on top of a technology called the blockchain. And the absolute key difference? No central authorities, no intermediaries. It's just code that lets people connect and transact directly.
And the tech that makes all this possible is the blockchain. The easiest way to think about it is like a giant, shared, public notebook, a ledger. It's copied and stored on thousands of computers all over the world, so no single person or company can control it. And once a transaction is written down in that notebook, it can't be erased or changed, ever. That's how you get trust without needing a bank.
Okay, so if the blockchain is the foundation, then smart contracts are the engines that make the whole thing go. You can think of them as little computer programs that live on the blockchain and just follow simple if-then rules. For example, if you deposit enough collateral into the system, then the program automatically sends a loan to your digital wallet. The rules are baked into the code, and there's no human in the middle to slow it down or say no.
So what can you actually do with this stuff? Well, let's take lending. With protocols like Aave, people can deposit their crypto into these big collective pots of money called liquidity pools. Then, other people can come and borrow directly from that pool. The smart contract handles all of it: the interest rates, the collateral, everything. The bank's job as the loan officer, it's just been replaced by code.
Okay, how about trading stocks or currencies? Well, instead of a central place like the New York Stock Exchange, DeFi has decentralized exchanges, or DEXs. A platform like Uniswap uses these smart contracts to create something called an automated market maker, which is a fancy way of saying it lets you trade your assets directly with other users 24/7 with no one's permission, right from your own wallet.
Now you might be thinking, hang on, crypto prices are all over the place. How can you build a financial system on that? And you'd be absolutely right. That's where a crucial piece of the puzzle comes in: stablecoins. Coins like DAI are specifically designed to hold a stable value, usually pegged one-to-one with something like the US dollar. They're the anchor that makes DeFi practical for everyday stuff like payments and loans.
Okay, so we've got the basic building blocks down. Now let's really see what this looks like in the real world. Let's put old finance and new finance head to head. And I think the best way to do that is with something most of us have dealt with: trying to get a loan.
You know this dance all too well, right? First, you hand over all your personal info. Then, a bank pulls your credit score and scrutinizes your entire financial life. They assess whatever collateral you're putting up, and then you wait. Maybe for days, maybe for weeks, and maybe, just maybe, you get the loan. The whole process is based on someone else giving you permission.
Now, look at the difference. It's night and day. In DeFi, you go to a protocol, you deposit some crypto as collateral to back your loan, and boom, the funds are in your wallet, instantly. There's no application, no credit check, no waiting for a committee to approve you.
The code is the only judge. That's it.
So when you lay it all out side by side, the differences are just stark. You go from needing intermediaries to using smart contracts, from a closed permission system to one that's open to anyone with an internet connection, from opaque to totally transparent. But, and this is a huge but, look at that very last row, security. This is the trade-off. Your bank has things like FDIC insurance. In DeFi, your security is based entirely on how well the code was written. There is no safety net.
And that brings us to maybe the most important part of this whole conversation, because DeFi is absolutely not a magic bullet. For all of its incredible, world-changing promise, it comes with a set of very, very real risks and challenges that we have to talk about honestly.
You know, this quote from our source material really just hits the nail on the head. It perfectly captures where we are with DeFi right now. On one side, you have this amazing vision of a better financial system. But on the other, there is a huge chasm between that vision and today's reality. And bridging that gap is not going to be easy.
Right now, there are two massive hurdles holding DeFi back: security risks and regulatory uncertainty. On the security side, a smart contract is just code, and code can have bugs. And a single tiny bug, like the one that hit the BZX platform, can be exploited by hackers, leading to millions of dollars lost in an instant. Then you have the regulators. How do you apply rules like Know Your Customer to a system that, by design, has no central office or CEO? They're scrambling to figure that out.
Now, the good news is thousands of brilliant developers and researchers are working on these exact problems every single day. They're building better tools to audit code and find bugs, they're thinking about new ways to approach regulation, and they're trying really hard to make the whole experience way less intimidating for the average person. This is the hard work that will decide DeFi's future.
And so that's where we land. We have this incredible technology that promises a more open, a more efficient, and a more accessible financial system for everybody. But at the same time, it's still really complex, it's definitely risky, and it's operating in this kind of legal gray zone. The question of which side of that coin wins out, well, that's one of the biggest questions in finance today. And now you understand exactly what's at stake.